At 9:30 a.m. this morning, the phone rang at the headquarters of J.P. Morgan Chase on Madison Avenue. It was the margin clerk from the CME Group. The bank was required to deposit $4 billion in immediate liquidity to cover the exploding losses on their silver short positions. Usually this is a routine transaction. The bank wires the money and the game continues. But today, something historic happened. The wire didn't come. 10:00 a.m. passed, then 10:30 a.m. By 11:00 a.m., rumors began to swirl on the trading floor that the world's largest bullion bank had missed a margin call. We can now confirm that J.P. Morgan has failed to meet its capital requirements. For the first time in American history, a too-big-to-fail bank has technically defaulted on its obligations to the exchange. The king has fallen. To understand the terror gripping Wall Street right now, you need to understand what a margin call actually is. When you trade with leverage, you borrow money to open a position. The exchange requires you to keep a certain amount of cash in your account as a safety deposit. If your trade goes against you, like silver rocketing to $85, your losses eat into that deposit. The exchange then issues a call for more cash. If you don't pay within the hour, the exchange takes control of your account and liquidates everything you own to pay the debt. J.P. Morgan, the bank that holds the deposits of millions of Americans, just admitted it doesn't have the cash to keep its gambling addiction alive. How can a bank with trillions in assets not have $4 billion in cash? This exposes the dirty secret of fractional reserve banking. They don't have the money, they have assets. Illiquid real estate, long-term bonds, and toxic derivatives, but they don't have cash. When the silver squeeze hit, the value of their liabilities exploded, while the value of their bond portfolio crashed due to rising interest rates. They are caught in a liquidity trap. They are asset-rich on paper, but cash-poor in reality. And in a margin call, only cash matters. This missed payment proves that the bank is operating on fumes. Because J.P. Morgan missed the call, the CME Group, the exchange, is now legally required to liquidate their positions. This means the computer algorithms at the exchange will automatically start buying silver to close out J.P. Morgan's short contracts. They don't care about the price, they just hit market buy. This is the fuel for the super squeeze we predicted. We are about to see a forced buy-in of billions of ounces of paper silver. This mechanical buying pressure will send the price vertical, likely smashing through $100 before the end of the day. The default of the short seller is the victory of the long holder. J.P. Morgan is not an island. They are the counterparty to almost every other bank in the world. If they default, they cannot pay Bank of America. If Bank of America doesn't get paid, they cannot pay Citi. This is counterparty risk. It is a chain of dominoes. The missed margin call this morning has triggered a chain reaction that is tearing through the repo markets and the derivatives complex. We are seeing spikes in the overnight lending rate that indicate banks have stopped trusting each other. No one wants to lend money to a dead bank. The credit markets have frozen just like they did in 2008. We have reports of an unscheduled emergency meeting taking place right now at the Federal Reserve Building in Washington, D.C. Helicopters have been spotted landing on the roof. Jerome Powell and the Board of Governors are deciding whether to intervene. They have two choices: let J.P. Morgan fail and watch the global economy collapse, or print trillions of dollars to bail them out by 5:01 p.m. today. If they choose to print, which they will, it will be the end of the U.S. dollar as a store of value. They are about to sacrifice the currency to save the casino. This is the most critical warning for you, the depositor. If J.P. Morgan is insolvent, your deposits are at risk. Under the Dodd-Frank Act of 2010, when a bank fails, they can legally execute a bail-in. This means they take the money in your savings account and convert it into bank equity, shares. You become a shareholder in a bankrupt bank instead of a depositor with cash. This missed margin call is the trigger event for a bail-in. If you have money in a major bank, you are now an unsecured creditor to a failed institution. Get your money out while the ATMs still work. The market knows what this means. Silver is reacting violently. In the minutes following the leaked news of the missed call, spot silver jumped $5. The algorithms smell blood. They know there is a forced buyer in the market. Every hedge fund in the world is now front-running the liquidation. They are buying silver because they know J.P. Morgan must buy it later at a higher price. This is the definition of a gamma squeeze. The price is no longer determined by supply and demand. It is determined by the desperation of a dying giant. Do you think it's a coincidence that this happened right after China drained the vaults? China played the long game. They bought the physical metal, leaving J.P. Morgan holding naked paper shorts. Then they pushed the price up in Shanghai, forcing the margin call in New York. This was a calculated financial assassination. China has effectively bankrupted the American banking system without firing a single missile. They exposed the leverage and pulled the rug out from under the dollar. For 100 years, J.P. Morgan was the symbol of American financial strength. It was the fortress balance sheet. Today, that fortress crumbled. The psychological impact of this default cannot be overstated. If JP Morgan isn't safe, who is? This loss of confidence will trigger a bank run across the entire regional banking sector. People will pull their money out of everything and put it into the only things that don't rely on a bank's promise: gold, silver, and Bitcoin. The era of trusting bankers ended at 9:30 a.m. JP Morgan holds over $50 trillion in notional derivatives. That is more than the GDP of the entire world. A default on a $4 billion margin call is the spark that ignites this $50 trillion powder keg. These derivatives are bets on interest rates, foreign exchange, and oil. If JP Morgan cannot honor these contracts, the global clearinghouses will fail. We are staring at a financial nuclear winter. The system is too interconnected to survive a default of this magnitude without a total reset. Turn on CNBC. Are they calling it a default? No, they are calling it a liquidity glitch or a technical delay. They are trying to keep you calm. They are interviewing banking analysts who say the system is well capitalized. Do not believe them. They said the same thing about Lehman Brothers 2 days before it went to zero. They said the same thing about Bear Stearns. The media exists to prevent a panic, not to tell you the truth. The truth is in the numbers, and the numbers say the bank is broke. Jamie Dimon, the CEO who called Bitcoin a fraud and mocked silver investors, is now silent. He has likely been removed from control by the regulators. His arrogance led to this moment. He leveraged the bank to the hilt, betting that the Fed would always save him. He was right about the Fed, but wrong about the timing. He destroyed the bank's legacy in a single morning. This is the hubris of Wall Street exposed for the world to see. The default of JP Morgan freezes the trade finance system. Companies like Tesla and General Electric use JP Morgan to finance their daily operations and payroll. If the bank's accounts are frozen or under regulatory seizure, these companies cannot pay their workers or buy raw materials. The supply chain freezes. This is how a banking crisis becomes a depression. The real economy runs on credit, and the credit machine just broke. Now that the margin call has been missed, the next step is force majeure. The comics will declare that due to the default of a major member, they are suspending all silver deliveries. They will try to settle the contracts in cash. But what cash? The cash they print? If they give you dollars, those dollars will be worthless because of the hyperinflation caused by the bailout. The only way to win is to hold the metal before the force majeure is declared. We expect the official announcement of a restructuring or government conservatorship, bailout, after the markets close today at 4 p.m. They will do it on a Friday or after hours to minimize the panic. They will announce a bank holiday to stop you from withdrawing your money. You have hours, maybe minutes, to act. Once the holiday is declared, your digital money is trapped in the system. Chaos is a ladder. For those who are prepared, this is the greatest opportunity of your life. While the masses panic, the wealth is being transferred to the holders of hard assets. Silver at $85 or $100 is still cheap in a world where the banking system has failed. When the dust settles, the new monetary system will be built on gold and silver. You are holding the currency of the future. Where were the regulators? The SEC, the CFTC? They were asleep at the wheel. They allowed JP Morgan to amass a short position that was bigger than the entire market. They allowed the concentration of risk that destroyed the system. This proves that the government cannot protect you. Regulatory agencies are captured by the industries they regulate. You are your own central bank. You are your own regulator. If you have cash in a bank account at a major institution, move it. Move it to a local credit union, move it to physical cash, or move it to assets. Do not leave significant capital in the blast radius of JP Morgan. If you have unallocated silver, demand delivery immediately. If they refuse, threaten legal action. Be the squeaky wheel. Get your wealth out of their hands before the doors lock. It happened. The invincible bank has fallen. The margin call was missed. The default is confirmed. The system we have lived under for 50 years died at 9:30 a.m. today. We are now in the transition phase. It will be messy. It will be scary, but it was inevitable. The dollar is dead. Long live silver. Prepare yourself, protect your family, and watch the history books being written in real time. The contagion has officially jumped from the commodities pit to the stock exchange. As news of JP Morgan's default spread, the S&P 500 and the Dow Jones Industrial Average went into freefall. Algorithms are dumping equities to raise cash to cover the banking losses. We are seeing a sea of red across the board. Tech stocks, which rely on cheap credit from these broken banks, are being obliterated. This is the liquidity crunch we warned you about. When the banks catch a cold, the stock market dies of pneumonia. If you're holding stocks today, you're holding tickets to the Titanic after it has already hit the iceberg. The tragedy of this default is that it won't just hurt the bankers, it will destroy the retirees. JP Morgan acts as the custodian for trillions of dollars in pension fund assets. With the bank in technical default, those assets are now frozen in legal limbo. Millions of teachers, firefighters, and public workers are waking up to find that their retirement funds are locked inside a burning building. This is the theft of a generation. The bail-in laws allow the bank to use those custodied assets to stabilize their own balance sheet. Your retirement didn't just vanish. It was seized to pay for Jamie Dimon's mistakes. Watch the White House press briefing tonight. They will not accept responsibility. They will not blame the Federal Reserve's money printing. Instead, they will blame speculators, day traders, and foreign actors. They are already drafting the narrative to label silver investors as economic saboteurs, expect calls for draconian new regulations to ban hoarding, and restrict the ability of retail investors to buy precious metals. They are turning the victims into the villains to distract the public from the real criminals in the banking cartel. While silver is the spear that pierced the heart of the system, gold is the shield. As the banking system crumbles, gold has quietly shattered its all-time high, crossing $3,000 an ounce. Central banks around the world are dumping dollars and panic buying gold. They know the JP Morgan default signals the end of the dollar standard. Gold is remonetizing in real time. It is returning to its role as the only collateral that has no counterparty risk. Silver made you rich today, but gold will keep you safe tomorrow. The events of January 5th, 2026 will be taught in history books for the next century. It is the day the illusion of paper wealth finally collided with the reality of math. The lesson is simple but brutal. If you can't hold it, you don't own it. The digital numbers in your bank account were never money. They were IOUs. And today, the issuer of those IOUs went broke. The only people who are safe tonight are those who hold physical silver and gold in their own possession. The system has failed. The reset is here. Do not trust the recovery, trust the metal.